Yeah, good morning, everybody. Welcome to this section. We've had last week was very great, and we had back-to-back victories in terms of knowing where the structure is and what we have to do. The only way you know what you are doing in this trade is when you know the direction of the trade, and in succession we are telling ourselves where the direction of the trade is heading, uh, and we are spot on that. Over the past 6 weeks, I've been telling us about the direction, and I've been sending videos and updating and all of that. And I've talked to very few peers, and our trade is doing perfectly well. This morning, I will be touching on USD pairs, maybe about 3 of them: Euro dollar, Aussie dollar, and dollar CAD. And on yen pairs, I'll be touching on CAD yen, pound yen, CHF yen, and dollar yen. I'm not going to really take too much time on those pairs, but I'll just be telling us levels and all of that for our training and for what we must know. When you know what I'm teaching and the way it's working out, you are more confident to launch and to actually take decisions on what to do in this market. Now, where exactly the trade is will tell you when can I increase my risk, when can I reduce my risk. These are questions that you have to answer. You don't just look at opportunity because you are seeing price action, or you are seeing candles, or you are seeing that, okay, they are changing direction and you want to. Where are they heading? So if you don't know where price is heading to, what's the point of you trading it? You must be able to say that, okay, now I can see what this price is trying to do, and I can, see that it's going to move at a level, and I should be expecting this kind of a reaction at a level. These are questions that you must ask yourself, that, okay, I know that the destination should be towards this area, and you must have done that back to back on several occasions, and you see that, okay, the price actually done that. But again, you must know that within these movements, there are variations that will occur. You must apply yourself as such that there's going to be some variations within the movement. So you must be prepared. And even with the variation, you must know that these are the limits. If price is going beyond what you had estimated and what you had probably plotted, or then you know at this level the structure had changed, and this structure that I'm seeing is not going to play according to what is scripted. Then you have to exit, plan and exit. So the corrective pattern, like I said, they are the patterns that takes the majority of the move, and if you don't know how to trade them, we'll be missing out big time. So week in, week out, it's been win and win and win and win for us. And I've told us again, you don't do what? You don't do so many pairs. You major on few ones, maybe 1 or 2 or 3. You major to study how their movement is and all of that. Now, we most of the time fall prey and fall victim of something that you think that the more pairs that you have a look at, the better the opportunity that you have. The more pairs that you engage yourself doing, the better the opportunities are. It doesn't really work like that. If you are focusing on too many pairs, you won't be able to even know what and where they are. The important thing is to know where the structure is and what is going on and what is likely going to happen. So if you know that, then you won't be moving and shifting from one pair to another pairs and distributing your lots on so many pairs. For instance, if you want to do 3 pairs and you want to do a 0.01 on 3, why don't you now put that 0.01 on just one pair that you are sure of? Then you do probably a 0.02, on one entry and 0.01 another entry. Then you plan to close one, then you leave the other one later on. Just one pair will fetch you what 3 pairs would have fetched you. Then you don't also fall into this prey or this mistake of doing more than 2 correlated pairs. For instance, if you are doing a Euro USD and you are doing an AUD USD, that's 2 already. So putting Euro USD card, pound USD on top of it, you want to multiply your loss. You are thinking that it's going to be a win. So if you lose one, you lose all. So you are duplicating or multiplying your loss in that sense. You are doing a yen pair. You are doing card yen, pound yen, CHF yen, USD yen. It shows that you don't know what you are doing. So if you understand the structure, why don't you put your egg in one basket and you limit your loss? Then you know how to manage it. We should not be falling victim of that. So I needed to say that quickly before I go into structure. Now, this is Euro USD, and this is the big time frame that we have at the back of our mind, I mean, in front of us rather. I remember I told us in the last video that this signal was a buy for us. If you look at it on the monthly time frame, that is signal a buy. At what level do you want to buy? And these are monthly candles. So the monthly candles would give you an information, but at the same time, it doesn't say more than that. What this one has said, because anybody that does not understand how the big time frame candle works and price action works, and you tell yourself, okay, now this opened there and closed at this point. Of course, price engage these areas on the monthly time frame. Time price majorly played here between this zone and now see, and you are planning, you say, okay, you buy at the close of one market of one candle to go up, and this will be wrong for you. If the candle actually closed here, you think another one will open here and will start going up. Indeed, it opened here. Can you see it opened here on the monthly time frame? It opened exactly here, and the candle got to this level and never broke the top here. And now see where the candle is. Then you now say, oh, you get frustrated because you don't know what the price is doing, because that thing had moved against your open level, where it opened, that moved seriously against you. It has moved about 222 pips, which is big. That is huge. You will blow your account. So you must now understand the reason why price has to do this, because we told you from onset that we are correcting with 4, and it appearing so that we are correcting with 4, from what you can see. Like in this candle now, look at the correction in the middle, that's on the monthly time frame now, in the middle of wave 3 here. There's no candle that closed big like this. All these ones are smaller. The green candles are smaller, and this is big enough for wave 4 correction. This is wave 2 correction. And that this movement had confirmed that this is wave 4, the big time wave 4 that we are doing. Are we done with this correction? I don't think so. So I don't think so. We are not done with this correction. So let's quickly now shift back to the weekly, knowing that now we have confirmed that this is major 4. No major anything here within wave 3, except you now switch to the weekly that you see better green candles. Now switching to the weekly time frame. So we can begin to see the wave 2, and all these ones are more now, more numerous green candle that will not show you anything. Even look at how big this one is. It was like small within the monthly time frame, very small. But here it was obvious that we were correcting big 4. You know, I needed to actually switch to that for you to see that we are sure of what we are trading. And again, if you had seen this, the last week closed like this. In some climbs, it could close like this and climb higher. It could close like this and come lower. Now the direction is what? Lower, because we were expecting that the price was going to do that, move down, that it's not going to go higher. If you are thinking, oh, it's wave 1, and you expected, okay, an ending diagonal here on the weekly on the weekly candle, you're not going to see that because the price is correcting. So we knew that the configuration or what we're going to see is correction, and that is what is happening now. So because it's correcting now, it broke this low. Is it going to go all the way down? That's another thing entirely that we have to look at. Now this candle is still going, and the way it's going, the moment of this candle tells me that this is also a correction. Now, if the candle wants to go further down and not correctively, you're not going to see that. You won't see a wick here. I'm just letting out secret for us. If this candle is going to continue to go down as wave 5, you won't see a wick here and see a bit here. The bit will be up here and the wick will be down there. So when you now see that, you understand that, okay, now they are pushing lower. But the way it is now, it's a correction. Now, if it's going to go further down, you should expect something like this. When you see a bit on top, but this one will be probably a bit longer. Now, look at this one also, it's a correction. When you see a weekly candle with a long, and it's bearish, it could occur, you know, on the other side, you know, it's the body is down, you know, and close down like this, and this one is a long wick, is still giving you a corrective format on a weekly time frame. So it's not a continuation for the downside, but a correction. That's what it's saying. And this one can now tell you, with the way it closed like this, that they are going further down. This one can show you that it's the way you can see the bit on top of it. So there is a way in which you look at the candle. So, but you don't just look candle isolatedly. That is the price action of the candle isolatedly. You don't do that. But again, you look at your structure, where you are within the structure. So I'm just using that to teach us. So we know where we are, that this is the end of wave 3, and this is the A leg of wave 4, and this is what we have now. So when you switch to the daily, let's see what we have on the daily. Now, the way the daily candle is, tells me something that this is with A, which has ended, we are doing with B. But now, seeing this candle, the way we saw this one on the weekly, it has also formed on the daily. It has formed on the daily like that as well. So the head down with the beat, and this one, the wick is long up here. Like I told us in the last video, that this one has signaled that we may be coming down soon, and that this is the last confirmation for me that we are coming down. And we saw something also during the week when I told you that the price, I dropped it on the hub, that the price is still going to visit 1.077, and exactly it played out like that. It was the structure. You can see I put one leg there, and I went down with it. So if this one is at 1.07736, I put my at 1.07700. So just it might put at a 6 because of the spread. Yeah, I think for the broker that we use, Euro USD is one of the pairs that will give you almost a very perfect entry when you do it. When you put it, it won't even give pipettes. It won't take 0.5. I mean, it won't take 5 pipettes from you before you are drawn in. So I discovered that. Now, looking at this candle on the daily, the way it's going, it's going to close in few hours, and the way it is tells me that we're likely to have more downside. Even though we are expecting that this B leg is going to end, but not now. Not now. This B leg is not going to end now. From what I can see, this price action here tells me it's not going to end now. We may be out. You don't want to buy from here, and you don't want to sell from here. Let me bring in my drawing. That you can see also how quickly things change here. And that is one thing you must have at the back of your mind when you are doing analysis. See, there are possibilities, there are different ways price could go, when you are doing this. And see what I taught you the last time, showing you this an expanded flat. I said expanded, running flat, there. And that's the way it's looking, you can see. Now, I told us the possibility that the price could do this when this leg came down as A and this one went up as B, because price actually touched here at 85.4, and I was thinking that price is going to go down this way, and that is not the case. You can see it. Price chose something else entirely. So, and if we had done that, from what we were projecting, if this one was going to be a zigzag to get to this level that we are still coming to, this is the level we are coming to here, around 10,800. That's where we're coming to. But price had changed that in the middle. So, and that is why anybody that is giving you a signal that your entry, your TP, your stop loss, it is not realistic, really, because price changes structure in the middle and can do what you have to continually look at structure. And that's why we have to modify a whole lot of things. And we must to know, okay, this is most likely the end place of the structure where we're going to come in. For instance, we came in, I first gave you an entry around this level here. And price, yes, around this level, a bit above it. Just around this level here. Yes, around this level here. A price was just moving up and down for so many days, around this level for more than a week before eventually we saw this on Friday. I mean, on Thursday. Thursday was the first move on Friday. And it happened in less than 18 hours to get to TP. And this movement here would frustrate anybody. Then you now begin to doubt what I've told you. Now, seeing that price actually broke this structure of zigzag had been broken, so it's not going to work like that. You can see price. Let me show you again. This is the first one, which had been broken. So price is not going to use that. And the other one, it should terminate here, and that also has been broken. So price is not using that. Price has changed the structure of correction. So these also, they are not working. We have to go by what the price is doing. And this is why you look into the structure and see what your price is doing. From time to time, we have to engage. So price is not choosing that, even though it's still a complex structure, but price is not choosing that. One thing that prevailed and is working in our favor is that because we had looked at price, on a higher time frame to see what price will likely do. And that is one thing that is working in our favor here. And so we know that is working in our favor here, and we know. Now, this is A, which is in blue, the gray, and that's with A that got broken here, and they didn't move immediately to the downside. This was used as the immediate wave to the downside, and this now looks like an A correction and a B correction and a C correction here. So that is what they have done at the end of the day, which has changed that slightly. So we don't have an X that has changed slightly at the end of the day. So if you look at this one on the bigger time frame now, it has changed, and you have to correct as such. It has changed. It has changed, and the tip is now here. So that has changed. So that has changed. And so the movement of A actually now is from here. So A is from here to here, and B came down here. And so the leg C got to this point. So this one is off, not needed. This one is out, not needed. And this one now is out, not needed. You have to change all of that, not needed. So we are within these three light blue, and A, which is here. Okay, I didn't put a B. This is the fourth one. And this is a B, which is here. So looking at this structure, the A went up here, the B fell short of A, which could actually put this one at what, as either a zigzag or a 90, but I don't think it's up to a 90. Let's see. So it's a zigzag shot. So if we take it to the end of the A, that is about between 76 and 85. That's a zigzag. 90 should be here, which is lower. So it's not, so it's a zigzag, is a zigzag which actually went past a bit, and it didn't reach an 100 really. So almost reaching an 100 of the C leg before they force the price further down. So that is how they played it here. So it's a zigzag correction. So we have the first move in the middle here. So the first move, a wave like a correction. So the way it's going to go at the end of the day will now be like we're having a this and we are going to see a this. So now this now move, we are going to see three waves really. That's the thing. We're going to see three waves. That's the thing really. So we have 1, 2, 3, and this move. So we're going to have this move at 1 here. We are going to see a correction and the last leg before we come up. So, and that is what we want to see now. Let me go to the lower time frame. Going to the lower time frame. Going to the lower time frame. So that had changed a bit. So a bit touch, we are okay, just a bit shy. Okay, and this also is a bit shy. That place. Good. So this is our B. This is our A. And this is our C before that move. Okay. Now, we're trying to guide this structure and it was broken. And trying to guide this structure also, it was broken to the upside. Now, the structure that we have to see broken again is this structure now, which we have to guide to the downside. And this is this new structure that we are looking at now. So this is the new structure, and the best way of catching your correction and to see what is going to happen is to now begin to work with this new structure. Now, with this new structure, some things are going to change for us. And what is going to change is this. We'll be looking at this as an A. We'll be looking at that as an A. And we're looking for a B. Then a C to come later. I want to be fast. I don't want to spend too much time. If I use this to teach you, then you can transfer that. We are done with this. So I can change that color. Now, so we expect a wave of this that is coming down to end soon. Then we need the B leg to come up and the C leg to come down. And when that happens, we are going to be finishing this big B, then for more upside. But for now, you don't think that this one will continue to go down. So all we can do is to wait for this. You don't want to also buy from here, thinking that this is the end and it will continue to go up. I will tell you, let me let out the secret for you. Why that will not happen and what level will be engaging this. Let me quickly do that. From the point of movement up here, remember the price this is the point of action, the first price action here, which I said price will break or not, but price didn't break it. So remember that place. So from this purple to the purple is the whole extent of price movement. So if you do a fib retracement of that for a B wave, we said this is 50, which the price had taken. I told you that the price would do a 50, and this is a 61.8, and this is a 76, and this is 85, and this is 90 here. I don't need a 50 anymore. So that one is off, so that we don't have too much of drawing. And we don't need this one again, so that we don't have too much of drawing. Let me just do away with these ones as well. Let me still leave these ones here for one reason. So now this is a secret. You can see that this has been breached to the downside. I will expect a spot reaction here, even though we may still take it as a return from 61, but it has been breached. I was expecting it's going to actually stall right on the dead of that line, and it didn't happen. Then looking at this candle also, the way it came down, those 4-hour candles, the way they came down is quite sharp, which is impulsive. And that tells me that there's a momentum towards the downside. So you don't want to continue to think that they are going to buy and to end B, the big B here. No, I don't think so. That is not going to happen. The higher probability is for price to continue to go down. To what level is what we have to now see. Price may get to this point to still play up as a zigzag to the upside, if that is going to happen. And of course, price may touch here at 90 to play as a regular flat to the upside. But I will doubt that much. Price may break. If price should breach 90, price is going to break this low one more time. But it's still a correction. You must know that. It means that price is going to break this one more time before going up. If price should touch here, then you should expect that price may breach this one to about 123 below. And when that happens, then price will do an extended flat to the upside. That is what it is. So we will be expecting a whole lot of possibility and permutation here. But for now, what we should be concerning ourselves with is a correction to the upside. And we want to sell the correction down. So if we are targeting a sell, what I want to do is to probably pick a sell from around this area to probably exit around this area. I will give the price the remaining to do. Once it gets to this point, I want to look for a buy at 123. I will be looking for a buy any moment from anything around this area, really. That is what I'm trying to say. But for now, it's a sell that you should look for, but not at the current level. So how do we pick the level that the price we can sell this? Let's go to the daily. We are going to look for a support that we're going to turn to a resistance. These are perfectly laid itself for me. If you look at this, if I enlarge this, let me take this one off for a minute. Now, there are levels I will think that I want to save price. The first level I want to save price is really here. I want to save price here because at that level is a very good level. That's the first level. This is like a daily support or resistance for me. And I have to consider this week also here, which is here. That is another good level of, so within this zone is where I will expect price action to take place. And look at my 50 EME also coming here. So of course, price may do something. Let's look at this. Price may still push a bit towards that zone, this zone here, and here. But when price comes here, it's too deep for me. Breaking this daily candle is not likely. Breaking this daily candle is not likely. So I should expect price, if I want to gain a decent entry, it's at 106,160. And maximum is 106434. I don't expect price to pull to this. It may, but not to 10700 anymore. Price will not do that. So this is how to catch a perfect level of entry, you know, for more downside here. This is good enough for me. So, and you know, and again, you don't want to put too much of a risk here. So this is good enough for me here. If you had picked yourself from here, probably you have used your 0.01, and you know you can't do more than use 0.01 also here. It's when you are going up that you can even use something bigger. Once you have the price action here to the upside, you can use something bigger. You must know at what levels you don't want to take too much of a risk, you know, depending on your account size. So this is what we are looking for. So let me that level and said I could still expect price. This level. I don't expect price beyond that place. So this is a good place. Yeah. I think price would respect this area. Okay, so that is what we can see on the daily. So, and if you look to the left, you can see here, this level is an high probability level. This level here, the second one here, where you had the week. So for if you want to do it, you could put your price really at your entry level at 1.06400 exactly at that level, 1.06400, and it will catch you. It will catch you. It should catch you at 1.06400, and that will be just about 26 pips extra. And when we come down, we are coming down at least to this level. We can put our TP at this level here around this area just before this low. So we are, of course, we'll be watching price action. When the price break this trend, we'll confirm that they are correcting upwards. So, and you continue now to watch for whatever is happening because they are correcting to the upside when the price breaks that. So you can put an alert here that price is correcting to the upside, and this is where we expect our entry between this zone, but definitely not more than here. And if you look again at our 50 MA on 1 hour, okay, that tells us perfectly that price, we should expect this one to play as what as a resistance, 50 MA to play as resistance to push the price down. So price may not, so stop loss should be around this area, really, ideally, should be around 10700, and price shouldn't do more than this. Even if once price compromise this level here, I want to get out. That's the meaning. And your loss will be so minimal if you are getting out around this level, then you want to begin to sell from here. That will be too bad for you. So you must know where to sell. Now, in the same vein, if you look at our pound, our AUD USD, I'm not going to spend so much time on that as well. Like I told you, AUD USD. AUD USD. Now, with the AUD USD, I had a perfect draw. I actually, from this level, was a perfect entry for me to sell. I sold from that level to this level. It was a very good hit for me. And let me go to the daily. Now, switching to the daily now. This was broken, and this is where the price is. The price is now coming down. Switching to the daily, price bounced back from here. So we're going to see a B. That's an A. Is an A. Okay, that's an A. So, and this is coming down. Once this one is broken, this is a new wave now. I won't take this to this, it will be wrong for me. You must know how to draw your trend when you are catching the correction. If you don't draw it correctly, you won't catch any correction. You have to step down to the lower time frame to catch it very well. So now, our point of entry here, let's look at the daily support. The daily support is at this week now. That's the first place that you can begin to see the price may get to. The another place is this, but I don't want to bet on that. That is too low. Is at this candle, where this candle broke. I don't want to bet on that. This is too low for me. Because it's too low for me, let me do this. So I would rather want price to push to this level, but I don't expect price also at this level. Because once you break above here, then it's not likely. So this level, I don't expect price here also. Here, I don't expect price here. And that's the last place I will expect price, really. This is the last place I will expect price. So a very good place for us is to target here, where I put the blue line that is not perforated. But because of the spread here, the line we expect price to get to is 0.071373. Because of spread that I know that AUD, USD, these are times it's crazy. I may just walk here. I'll target this candle here, and that should be perfect for me. The tail of this candle, the blue candle here, will be perfect for me. And I know that price will definitely pick me here. And how many pips is that if I want to sell to the downside? That's about 13 pips is okay for me that will draw me in. And I think when I came into, I think, yeah, it can give me almost something decent. I think when I had it, it was less than 50 pips also, or pipette also, yeah. You can still walk very close to it. So that's what you should expect. Then this also is going to run, this is A B leg is going to come up, and a C leg down to complete C. That's what you should expect. And switching to the lower time frame, I'm just showing us how to know where to enter now. This is the level I said you can enter now. You see, and the other one is here. Look at this level and this level here and this level here. So if you can still push it up to this level here, where you have this closure and the opening of this candle here, which is around 71303, 303, 71303, and 241 is almost the same. So you may just leave your stop here for more downside, and that would have gained how many pips from the current level? It's about 85, 86 pips from the current level that you now have an extra when you wait. You don't want to sell from here. That's what I'm saying. So this is going to pull back and probably going to test it. But we're going to wait for that to happen. But now to catch your pullback, you have to now stay within these. You're going to stay within these. This is what we're going to stay within. To catch that pullback. We are connecting these to catch it. Yes. So we are connecting this. Once the price breaks this, then we are catching. So it's after we have a leg B here that you now draw another trend. This is A. This is going to be a B. then a C will come. So I expect that price will begin to pull back maybe almost immediately after the opening. And this is giving me a recipe already for a pullback, you know. This is for anybody that knows the sign to exit yourself for a pullback. That's the price action I'm seeing here on the 4-hour. We must understand all this price action. This price action here is telling me, everybody get out, I want to go up. You can see that the wick is up here, so there is a pressure for more upside. So, and that is what it's telling me. So price is going to go up at least to get here. If it goes beyond that, this is the place I want to sell really. But I think price may just push beyond here. A kindergarten will say, okay, this is the place price may just get to, which is the 4-hour break. This is the 4-hour support, but I think price may pull beyond 4-hour support now as resistance and still travel a bit up here. That is what I can see. But you must be looking for price action around this area also. And if you don't get it around this area, the kind of candle closure here will tell you if the price is going to come up here. So you must be watching. There's something that is absolute, but you continue to watch. You know, soon. What did you? Now, let's go to USD card. I'm going to USD card. For USD card, let me just go to my, I don't want to waste time, you know, price. Okay, let me do something first before I go to my own drawing or analysis. Now, price, you know, came down from here and it came down to this level. This is one level. And this is another level here. So this is another level up here. Okay, which where price is recently, and this is another level I want to draw up here. Where price. So now the movement here to this level is seen as, is it a wave 1 and wave 2 thing that we had there? Let's see. This looked like a wave 1 with wave 2 things that we had there. Now it's almost at 76, so it may probably be that we had a wave 1 and wave 2 thing at that level, and price began to move further up, you know, from this wave 2, and this is internal structure of wave 3. Let me just begin to show you that wave 3. It may be or not, but one thing you must know when the structure is broken. You must know when the structure is broken. So now this structure has been broken. So this had confirmed a break of the structure. You understand? So if this one is now seen as 3, and you go to the lower time frame, you may begin to see this as a 3 and a 4. You know, this is the 4 of within 3, a 4 within 3, and a 5 of that 3, and before you now have a major 4 and completely a 5, and before we now have a correction. So this might be taken as a wave A correction of the entire movement. If that is taken as wave A correction of the entire movement, this is a break now. When you look at this structure again, the new structure again, from here down to all that, I want you to look at me, look at what I'm doing. This structure has been broken for a downside. This structure has been broken for an upside. So now with the way the candle is here, is more like an import, tells me that this candle is going to go further up and most likely break this structure of 3,700 above. That is what I'm beginning to see from here. So now, but let's now compare this wave to where this wave is, not this one. The entire run here to this one, let's compare what it is. Let me perforate these ones because they're not all that important to my field analysis. So if I do that and I go between here and see the kind of retracement I have here, this is almost at 85. So tells me that this might actually be a wave 2. So this might actually be a wave 2 thing that has ended. I might want to take this one as an A and see what this one is going to do for me to come to correction. Okay. So in that case, if I take this one as an A for me, so I want to see the way this B is going, but it's because it's impulsive. The way this one is going, because it's impulsive, I want to see a correction of it to the downside for me to have an entry. I'm already on this. I'm just showing us something, and I'm going to go down to it very soon. So to have an entry, one of the perfect way to have an entry is to target this level that was broken. Can you see? Look at the daily candle. So these are the levels that you can plan your entry. So if I want to use this green as my level of entry here, and it shouldn't go beyond this level in terms of what I can see, it shouldn't go beyond this level when I want to plan entry. So between 191 and 25,960 should be where I should be expecting an entry with this kind of a wave now that I'm seeing. You can see it's impulsive. We had an impulsive of 3 here and 5, an impulsive here before this correction, downward, and this is now happening. This is happening, and it's an impulsive wave. So is it the beginning of wave 3 to the upside? It's not impossible. That is the wave 3. So if it's going to be the beginning of wave 3 to the upside, if it's 1 and this is the correction of 2 and wave 3 to the upside. Now this one to me has completed itself like a triad to the downside, because this is one, if you break this one out, and this is one is another part, second part of the correction, and the third part may have well said this is the end and is a zigzag down. So you can take this one as a O correction of 2, you're going to zigzag the first part, the second part in the middle, and the last part. But let's focus on here. If this one is wave 1 of 3, we're going to have 2 corrections to the downside to complete this one for more upside to break this structure above. So that is what I'm trying to show us on the daily. Now, let me now go to my own structure so that you will see my own structure so as to save time. So we have confirmed that we are going further up. We have confirmed that we are going further up. So we don't want to break this one here. We don't want to break this one here. So we are going further up. Now, let me go inside of 4 hour. Okay, now, before I go inside of 1 hour, my levels that I click there, okay, the level I click there that we might actually be buying later is this level and this area. These are the areas I think you might be buying later. These are the areas here. Now, so doing that now, so let me now go back to the 4 hour. Now, going to the 4 hour, these are the levels that we expect price to come to. These have been broken, and this for me is with 1. Okay, no, sorry, it's like the correction here. So this is with 1 here. Let me go to the internal structure of that and show you something. Let me go inside 1 hour. Yeah. This is 1 hour. This is 1 hour. This is 1 hour. Now, looking at this 1 hour and where it is interesting, that taught us something that, you know, this is a correction. If this is a correction and it's breaking this thing, do you think that this price will be coming down from here because it has broken this trend? These are things you must know. When you know how to draw your trend and how to guide that within a wave, you guide within a wave that looks like impulsive, you have to now compartmentalize those waves to know when exactly you will be at the end of that structure. Now, the first structure that has to be broken is wave 1 of that move, which appears to be this. From here to here, so you can see the price moved and formed a support here, and this was broken to the downside here. And when it was broken, let me now shift to the 15 minutes time frame for you to see what I'm trying to show. Please watch. Now, this touched this and went up like this, and you now had a breach, price played and broke it to the downside. Tells you that wave 1 has ended. Wave 1 in the minor degree has ended here. So because that has been broken, and immediately it gave us a wave 2, because it is wave 1 and that is wave 2. Okay, that is clear. We are done with that. So I can connect this and this wave 1 to wave 2 to form a trend, which is the blue, which I'm watching. Now, immediately that one goes up, now we are within wave 3. Now, within this wave 3, what kind of 3 am I doing? That is the question now. What kind of 3 am I doing? That means 3 of 1. 1 of 1 ran itself as what? A 5 wave. And this 2 itself is still part of where this one touched for this 3 to move. Now, this 3 now, instead of 3, 1 of 3, and 2 of 3, 3 of 3, and 5 of 3, this is 4 of it, and it got here to give me a wave 4 here. So it gave me a wave 4 here. No, it gave me a wave 4 here and 5 here to give me a big 4 from here to here. Still within wave 3 that has not ended. Now, for me now, it seems now we are doing a 5 of wave 3. It's like we've just ended a 5 of wave 3, and this is wave 3 here. So these are internal structure of wave 3. So if I'm able to connect this, and not until it's broken, I won't say wave 3 has ended. So wave 3 for me has ended, but we have not done a 5. That is what I can see. If I switch back to 1R, if I switch back to 1R, so when this one went up for inside of the wave 3 and a 4 of it, and I'm seeing a 5 of wave 3, and which has completed a wave 3 of a big 1 of this entire run. Now I'm seeing the first time that these had crossed and had breached my trend support. So I see this as a correction of a big 4 of that 1. So if that is the case, then I'm going to see that if this line here is 2, and now this is a 3 and has completed it, I would expect that from a 2 to a 3, a 38, which should stall here. For internal structures, which is not a bigger time frame correction for wave 4, it can stall at 14.6, 14.6 or 23.6. But most times, if it's a big structure, you will expect it at 38.2, but not beyond here, which is 50. I'm just letting out the secret also. Now, for me, this is not the end of a move to come down. When we begin to see structure this way, we will not be entering wrongly. So I would expect this one to be an A and a B for a C wave for more upside. And when that upside comes, it means that we are running a wave 5. For me, might be running a wave 5. And when we run that 5, we will now finish the whole of wave 1 to have a bigger correction. And when we now have that bigger correction, that is when you are going to enter. And our entry point should be around here, which is where this is, or at this level. So that is what I think. But for now, I'm in it from this level, from 25600 level. I think I enter around this area. Yes, I entered around this area. So I'm in it, and I'm watching for this to finish itself. But this has not finished. This is just the A correction. I want to see B, and this is 1 hour correction. I want to see it on 4 hour correction, and see that we are ready to come down. So for my projection, if this is A and a B, I think the price will still pull to complete 5 around here and here to complete. These are the zone I expect 5 to be completed, and I've plotted it. And once it's completed, I will know I can probably sell from here to the downside, taking a minimum risk. You don't want to sell from here. You think it is done. I don't think it's done. I think it's still going for that up. So we'll wait and see. Anyhow, the most important thing is for you to wait, because this has more upside. It's better to buy it from a lower level than to say, okay, you want to take all the risk from this level to sell, because it can still go up to this point. That is the point I'm trying to make on this one. Now, I'm done with that. I'm going to go to MPRs. The time is going fast. Now, the first MPR I want us to see is Cardian. You must understand what the MPRs are doing on the big time frame. Cardian, that's what I want to go to. Let's understand what Cardian is doing. I've used this to teach us that it's going to break this structure. Actually, from projection, I thought that Cardian will be finishing with 3 around 104 or 105, which is around this level. But see what price did. So you don't just jump in because you thought it's going to finish it around this level. So, but these had confirmed that the internal structure of 3 has been violated. And so for me, 3, I think, or 3.5 may be completed, to understand. So, and for me, this is a wave A of that correction, and it's finding support on 50 EMA 4 or 1 hour. And we're going to see with C, a B up and a C down. That is what we should expect now. But in terms of a bigger picture, let me quickly show us in terms of a bigger picture. This is a correction of wave 4. Don't get it wrong. Like this is 1 and a wave 2 correction and a wave 3, and we're going to see a wave 4 correction, and we'll see where it's going to get to before we. So I would rather want to buy this for more upside than selling it for more downside. That is what I want to do. I want to rather buy it than sell it. I rather want to buy it than sell it. So bigger time structure. Let's go to the monthly. If you go to the monthly structure, we'll see things well. For this here, we'll see things well. I don't need all these ones. Let me even go to here at max so I don't waste time. Let me go to where at max so I don't waste time. Good. I'd mark this level here. Now, from this level and bigger time frame, I've been telling us, seeing the way this structure is, that it might be breaking up, and that is the way it's looking like at the moment. Price is breaking further up. So, okay, let's quickly do something. Now, that's the old wave so far here down, which is a run down here, and we had this move. So this new move now, for me, this is a correction of it. From here to here, you know, it's a move. And this is the first correction of it as far as I'm concerned. And that correction, you know, of that entire move from that broken line, yes, it's a broken line of the entire move correction, broken line to broken line, gives us an 85. So if it's an 85, that's a zigzag. So it gives an 85, which is going to be a zigzag. So this one, it's leg A and leg B, if it's a zigzag, could do something. If it's a zigzag, to end at 100 or to end at 123, if it's a zigzag. So, and how do we do that? We come from here, which is from this level of where the price came. Okay, sorry, I didn't get that. I did something wrong. So it's a zigzag. This is B going up. So a B up is that 100 of this, and which is where we are getting reaction now. It's almost at 100 of it, and then it could go to 123. So for B, it's a B leg. So it is a B leg from this level now of that correction to this level. Yes. So this is where I'm expecting the price to go to at the end of the day before we finish this leg. So B is expected around this area. So I can see that the price may be ending around this area. It's not just going to break the top. You don't expect it to break the top. If it breaks the top, then it's something else. And if it breaks the top and gives a reaction to for further downside here, I don't see that anyway. I don't see that. What I see, and that is clear on a bigger time frame, is that they are breaking this structure here, and they're going to break it above, and they are finishing their the fifth leg. So this is going to come down, and the price will be pushing higher to this level. This is the level we're expecting an end of structure, and the price will now give us C. So, and if that happens, we're almost there. Probably in another 2 months or thereabout, we will end all that. So that is what I'm trying to show us on the bigger time frame. So we are allowing this correction to take place for now to see what kind of correction we are seeing in the middle there. So this is the daily again, pound yen. I'm sorry, CAD yen. That's the daily again. This is where we expect price to get to before we come down. It's still far. How many pips? So within how many pips? Within like 690 pips or thereabout, or 685 pips or 690 pips. So which is still huge. So that movement up is still huge. The price just broke the top at this broken line, you know, and gave us a price action, exactly price action for correction. This is a correction of 4 that we're going to see. And when we have 4, 5 will be going up. How many pips do you think 3 did to get to that place? Let's see. From this level to this level, with 3 itself did 935. So if with 3 itself did 935, so what do you now expect? So you think it's big? It's not too big for with 5. It's where it's small, and that is what you should expect. It's small for with 5, which is okay for me. It's small for with 5, and with 5 should still be able to do that 600 or thereabouts. So that's what I think. Yes. So that's where, except if it's truncated, and if it's going to get truncated, we will see it. So that is what we should see. But how do you engage this? How do you trade it? How do you trade it? So if you look at this now, this is telling you, you know, if you are not reading the candle correctly, see this candle, and this is what I will tell you. This is where people will misquote and misjudge candle. Look at this one here now. If everybody had seen this candle, you want to interpret it. See the beat up and see this one down. You see, price is going down. Price is going down. You must know that when candles like this are occurring within correction, it meant nothing. It even meant reverse. So you say, oh, price action for more downside. So when you now look at this one, price action for more downside. I don't even share, you know, because I don't think it's going to work like that, because it's correction of 4. And that's why I had to show you clearly for us to see what is happening and what is playing out. So we are seeing, and with A, you know, because 3 for me is broken. Okay, 3 for me is broken here. Can you see? This is trend resistance for, or support for 3 has been broken, and I need to see this one broken. So my alert is on it that once it's broken, yeah, we are going to do a B. We're going to do a B. So once we do a B, it will be easier for me to spot where a C will be. And from that C, I want to ride up. And if I'm going to ride up, if from point here upward is, let's say, 60 something or almost 60, 80. And look at what is here. What is here already is about, it's about 260. That's 260. And I'm still thinking that price may go further down, you know, to where I expect around this area, where I expect C at the marked for a bigger fall of 5 of the 5th wave, 50 major. So let this one be broken to signal that it's broken. Now, one thing you must know is that when you are selling from here, you can never tell where this one is going to get to. Nobody. except you are counting the internal correction, you can count it right. But then for me, with these and these laid together, once it's broken, it means that that correction is ended. And when it's ending that correction, it does not mean that, oh, they are changing their direction. You must know when they are correcting. But this correction, the extent it will go up here will tell me the way it's going to come down. So B will talk to me about C. B ma fún mi ní òfófó of C, and that's what we have to wait for. And you don't trade everything, you have to wait. I don't know where this one is going to get to. If this one is a price action for upside now, from that level, which we can see. Now, if it's on the card here, now, if it's a price action for upside now here, it means that these will probably, my work below here, it might not break above. It could do anything, and I care less about that. I care less about that. It could do a 61.8, which is at this level, and this is a 76. It could do 85. Between here and here will still prove that it is what? It is a zigzag to the downside and can easily enter. If it gets to 90, fine for me. It still means that it's what? A regular flat, and I know where exactly it's going to get to 100. And I go up. And if it goes further up and break the top, if B breaks the top, you know that can be an extended flat or extended flat or a running flat. So possibilities. When you have too much of possibility on wave B, you don't want to trade with B. And that is why anybody would always tell you, be careful about your trading with B on a smaller time frame, which is a correction like this. If it's a bigger time frame correction, you can trade with B. But on a smaller time frame correction, you don't want to trade with B to the upside because you don't know where it is going to get to. So if you have been selling here, then and this one is going up, and you are confused and it's breaking up. Oh, you say, I don't know where it's going. You don't know it's going to break up, and you think, oh, you are losing money. But I'm just telling you, I'd rather wait for C, and I can sell on C and buy again when C ends. That makes some sense for me, because if I've been selling and I know this one is going to give me an entry to still sell, why don't I wait for B to end, give me a price action to sell, B down to C, and C back up? And I'm just telling you, that is how to do it. You don't just want to take a risk. That is on card. So if we take the same thing to pound yen, let's see the way pound yen is. Pound yen. This is pound yen. The monthly time frame on the pound yen, this is what is giving us on the pound yen. The same way, this one has gone up. See, this is pound yen on the monthly. So this price went up, and if we pick this one as A, correction to the downside, and this one is going as B, correction to the upside. Now, this one is far behind A, movement here, and the whole of this is still a B going to the upside. In that case, the way it is, because the yen pairs they are shown that they are mad and they are changing their, so this one might not break the top, unlike the other ones that will break the top. So their correction is different, but all of them are doing the same way to me. And so the reaction we are seeing now, we are getting a reaction exactly at 61 for wave 4 or 5, yes, at 61. So we may expect that these may do a 76, a 85 or a 90, but not more than a 90. This one is not going to break the top. I can use the whole of my mouth to say that why? It's because of where the other structures are. Here. So the other structures they are breaking the top of their own A to do an extension. So this one cannot do an extension. It's going to be huge. So it's not, and pound is that width now. We are in section. So this one is, I think it was tall majorly at 90. Price will not do more than that at 90. But price may do 85 and 76. But definitely price is going to break 61. That is what I can see here on the pound. So I needed to show somebody for all of you, for you to see that these are the areas we expect a price action for a change of trend to see here on the pound. And if you want to, how many pips to the upside from here itself to the upside to 70, that is huge. Can you see? But you can do it. To 76 is 1,000. Is 1,000 to 76, and to 8 something it's 1,600. So 90 is 2,000. So it's not impossible, but it's not going to break the top. So we are going to wait for what it's going to do here. Let's see if this one is even possible, because the 3 itself from here, the 3 is possible because the 3 itself did. So let me go and see the internal structure of it before I begin to give you a now. Okay. Yes. So the 3 itself is how many pips? The third wave itself is about 1,300. It's about 1,300 pips. The third wave is 1,300 pips. I think this one is still behind. It's still behind because this might just, well, it might just give it a truncation for all you know, it might give it a truncation. But I still need this one to break up here to say we are fully in 4. We are fully in 3. This may just be 3-1. This may just be 3-1. It's giving me a 3-1 structure here. This might just be with 3-1 because that's not broken 5-1. 5-1, you know, this is 5-2. 5, yeah, so 3-1 of 5-2. 3-1 of 5-3, yes. So this may just be a 3-1 of 5-3. I would need this structure to be broken to the upside before I can say, okay, you know, that's finished, all that. So I think the most important thing is for now, because this one cannot be 1,305, will now be, you know, more than that. It's still behind. It's behind. So this might look like a correction of 4 within 3 itself to now give us the last. This might just be 3 years, because if this is 1 and this is 2 of 3 and this is 3 of 3 and this might just be 4 of 3 to do a 5 of 3 and finish 5 of 3. Once 5 of 3 is done, then they will now correct 4 big time of that 3 to now do a 5 to finish it, to get to where I think it's going to get to. I feel that is what is playing out now. It's still doing it inside of 3 correction. So 4 of 3 correction, and it has not broken this trend line. So that is what I see this one doing. So, and if you want to still engage it, yeah, if you want to engage it, so because it has not broken this structure, and I don't think it's going to break it really, or already is pushing back here. So it's going to do a B and a C to now do a 5. When it does a 5 here, it's a 5 of 3 that is doing to finish with 3 up. And after it finished with 3 up, then it's now going to do a bigger fall that will break this trend. And when it does a bigger fall that will break this trend, then it's now going to go up and complete with 5. That is what is going to happen. So for now, we want to catch with B. So if you've been selling here, this is where a fall may stall. So let this with B go up. Once it goes up and is coming down, you can plot your exit of C on C. If you are selling, then you can buy from there. That is what I can say. So the last one I'm going to talk about is just USD yen, dollar yen. So I won't do more than that today. So I've shown you how to that is the structure. So we now understand the structures the yen pairs are making. So we now understand the structure the yen pairs are making. So unlike before, what are they doing? So you need to go on the monthly to see what structure they are making. Yen pairs are devilish at the moment. They're not obeying structure. So you can see, and that is what has happened here. These are broken all-time structure. You can see it has broken all-time high on the USD pair. So we didn't even have a reaction here because you can see USD yen. This one came down, and if we think that this is an A wave and the B wave had broken loose. So, and when B1, the old structure here is an A, and the old structure that is going up is a B. So, and it has broken loose. So where is it going to get to? So we wait for reaction, and all you can do is to wait for a B. And if that is the case, from that broken level to a broken level, from A, the beginning of A to the end of B, so it's going to be here. So we're going to wait for structure. What's going to happen here? This is 123, this is 127, and we're going to be very careful with this one because if it becomes extended, it can get to 141 here. So you must be ready. I think the way this one is going to give us an extension. It's going to be an extension, extended flat. That is the way it's looking, the way it's moving. I think it's going to break 123, 127. It's going to break that and get to 120, 141. But it won't go beyond 161. That I'm sure of. So the structure is clearer to us that this will not go past here. So in terms of what we expect, in terms of correction of this entire run, so it should stall around here. I don't expect it here. I'd marked it, we'll see, but be careful if you want to trade this. Be careful now. You must know what yen is doing. So it's not respecting anything for now. Yen is really weak. And going back to the internal structure of that, even on the daily, so you can see what it's doing here now. So this kind of a correction that is doing at the top here, we said this was 5-1. We said this was 5-1, and our 5-2 was somewhere here, and we said this is 3. So okay, this may just be a 4 of that 3 that we are seeing here, a correction of 4 to break higher to give us 5 before it comes down to do a bigger 2. In that case, sorry, a bigger 4. In that case, it breaks higher to finish 5 of 3, which appears as if 5 of 3 has not finished. I have to wait for all that to finish and to break this trend line. Once this trend line is broken, I know they are doing a 4, and I can plan to enter to do a 5 with them. And after a 5, yeah, from what I can see, it's still possible for this It's still possible for this to respect 123. It's still possible. It's still possible. We would wait. It's still possible for it to respect it. This one is not useful anymore. Just change all of that for me. So it's still possible. It's still possible. We'll wait and see. If this one becomes a 4 and pushes higher a bit, then it's going to come down. If it's a 4, if it's a 4 of that 5 of 3, then I will expect it can still fall back anywhere from here to do a 4 and to a 5 to this area. So it's still possible that it might respect 123, 127. So it's still possible. It's possible. So you might not do an extended flat. You might not. I just still run within 123, 127, which is about 700 to 800. It's possible. It's possible. So that is what they are doing. They are actually correcting a B wave, of a bigger time frame, and for a C to come. And that is what we are going to ride the downside. So with that, that ends the training for today. That ends the training.